Venkatesh Balasubramaniam, Managing Director and Co-Head Research with GM Financial Institution Security joins us now. We've got Arpit and we've got Kunal, so we're talking technicals and we're also talking the big picture view. Venkatesh, what's your sense? I mean, this market, is it running on, is it running higher because of liquidity, or somewhere there is a bit of an optimism which has kicked in regards to where the economy is moving?
See, we believe this is basically running on liquidity. Domestic flows have been very, very strong. As you know, the monthly SIP number is still very strong at almost 267 billion per month. So even though mutual funds have around roughly 5% of their holdings in cash, every month when you get these holdings, when you get these flows, you need to deploy it. So that is one thing. Secondly, since March onwards, what has happened is FI inflows have actually turned positive. So March, April, May, and June so far, FI flows have been positive. So definitely this is running on flows. Fundamentals are not that weak. Fundamentals are okay. The economic outlook is also quite good. But as you know, valuations are nowhere attractive, whether it be large caps, mid caps, all small caps. All of them are trading at one standard deviation or more above the mean. So valuations, very tough to make a positive call based on valuations. Fundamentals are okay. Outlook is okay. But at this point in time, whatever run up you're seeing as of now is more because of flows.
So that's the take. Let's also welcome Arpit Beriwal, Manager Derivatives at Motilal Oswal Financial Services, joining us on the show. Arpit, hi. What sense are you making of the market moves today, especially given some pockets that are really standing out in today's trade? There's this phenomenon we're seeing that what was doing well yesterday is not necessarily what's doing well today. You have energy, PSU banks that are doing well today. What are you making of this move today?
Very good afternoon to all. So if you've seen yesterday, finally Nifty was struggling from last almost 6 weeks to cross above 25 250 zones. And couple of days back, we have seen that breakout. And yesterday there's a one-way rally across Nifty and especially Bank Nifty where it touched new life highs. So looking at the setup for the July series, we're definitely bullish on the overall market outlook. Definitely selective sectors are likely to outperform. And eventually our target for Nifty would be around 26,000 on the cards. Bank Nifty is new life high territory, and definitely there is some more momentum that can be seen towards 58,000. However, talking about the sector specific, definitely energy, mainly led by Reliance, that has given a classical range breakout. So I think energy stocks from year on can definitely outperform. Along with that, second sector would be within from the financial pack, that is the NBFCs. So all in all, I think good market with good small cap and mid cap advanced equity ratio favored in the favor of bulls. We're expecting good momentum across the sectors, especially energy and financial sector as a whole.
Okay, so that's what you're liking right now, and that's how you're seeing the market setup. Venkatesh, I was reading this recent report by you, and what really stands out to me is that you are overweight real estate, REITs, and travel and tourism. Given that this entire Mahakumbh trend is behind us, one would believe that this sector could see a little bit of softening. What is driving this conviction for you?
It's like this. We are benchmarked of the Nifty, right? And in the Nifty 50, you don't have any real estate stock. So if we like any real estate stock, automatically we go overweight on real estate. Now, if you see the broad real estate sector, it's not like the sector is cheap. Most of the stocks are trading almost 15 to 20% above their NAV. Historically, trading bands are maybe 15-20% below NAV. So we are very, very selective when we come to stocks. We like DLF because it is trading on par. We also like the REIT names primarily because as interest rates come down, a lot of these REITs become very, very attractive. They are all trading at roughly around 7% yield and 10% growth. So it is more of a interest rate kind of a play when it comes to REITs. Real estate, we like again from a interest rate perspective, but it is not like we are positive on all real estate stocks because some of them are expensive, and we are aware that over the last couple of quarters and the next couple of quarters are going to be a little bit on the softer side. So that is on real estate. Now coming to hotels, here this has got nothing to do with Mahakumbh. Over the last 4 to 5 years, there has been hardly any investments which have been done in when it comes to the hotel sector. So there is a lot of demand, but the supply is not adequate. We believe this is likely to continue over the next year, year and a half or so. So from that perspective, we like hotels as a structural play. So some of the stocks which we like here are the recently listed Leela hotels. We also like Chalet hotels here. So these are two names which we like. So yes, I mean, we are overweight on hotels, real estate and REITs. Incidentally, none of them form a part of the Nifty.
Okay. What's your view on pure vanilla consumption? Tax cut, good monsoon, low inflation. Are we in a comeback patch for them?
Unfortunately, the top-down story seems very, very compelling, right? So you hear that the monsoons are very good. You hear that the tax cuts have happened in the recent budget. So ideally, one should be very, very positive consumption in auto. But when we are doing the channel checks bottoms up, that is not coming through. So our approach to portfolio construction is more bottoms up and not top down. Just because the top down view is positive doesn't mean we'll go overweight a sector. For us, it has to perform bottoms up. And unfortunately, volume growth looks weak when it comes to consumption. So we are underweight consumption. On auto, again, the problem is we are going to see a weak year when it comes to two-wheelers, four-wheelers, and CVs. Our advanced channel checks are also suggesting the same. So while we are not underweight auto, we are more equal weight because valuations are at least reasonable in auto. Whereas in consumption, valuations are very expensive. So we are equal weight, we are neutral auto, whereas we are underweight consumption.
Soap and shampoos are not selling, but luxury rooms are selling. Airports are clogged up, cinema halls are empty, but restaurants are picking up, Venkatesh. I mean, what a phenomenon is this, right? One side you've got FMCG, which is struggling because of discretionary spend is under pressure. Apparel, which is just about doing okay, but luxury and hotel and hospitality is doing exceedingly. Why do we have such a dichotomy?
See, maybe we have to once again revisit some of this data, data point. When you generally analyze any industry, look at penetration rates. So we need to perhaps ask this question that when it comes to basic consumer staples, have penetration rates in some of these staple sector reached a level where maybe structurally you cannot grow faster anymore? So some of these questions need to be asked over the last 2 to 3 years. One of the key drivers for a lot of consumer staple names has been premiumization. Now to some extent, I guess, maybe at this point in time, maybe the people don't have enough money to spend at the lower end of the strata. That could be one of the reasons why you don't have a lot of consumption when it comes to the mass end of the market. But of course, at the premium and the super premium end, I think there is enough and more, there's a bigger growth runway here, because as per capita income in a country keeps going up, some of these sectors generally tend to do very well.
Okay, so that's the take on consumption, but let's shift focus from that. And Kunal, some of these oil and gas names are doing exceedingly well in today's trading session. Case in point, you have HPCL, BPCL, IOC, IGL, GAIL, all of them are holding up pretty well in today's trade. What are your views on some of these stocks like HPCL, BPCL? How are they shaping up on the charts?
Yeah, this is a very big breakout for many of the oil marketing companies, specifically for HPCL, which I think yesterday also the stock was a outperformer with respect to the other two peers. Today also the stock has been a rank outperformer. It's up more than 4.5% as compared to IOC as well as BPCL, which have been slightly muted comparatively. But I believe that that's a signal that we are looking at a turn of events for the entire OMC pack. The best part is that the zone when the crude oil prices were extremely volatile from sub $60 to close to that $70 and $80, even in that phase, we did not see any major kind of a sell-off or a turnaround on the downside for these OMC stocks. And the moment we saw a whiff that the crude oil prices start to abate back again from 79 to back to that sub 70 mark and hold on to those levels, that's where we see the confidence brewing back again to the entire OMC. So I believe that that's a very strong signal that maybe we are looking at a solid base being formed for the entire sector and potentially a breakout which could last for many weeks as well as many quarters.
Arpit, what is your sense? I mean, this has been the laggard PSU space, so to speak. It did not participate in the erstwhile PSU bull run. Can OMC stocks enjoy the spot in the sun now? Arpit?
Yeah. So if you see overall the PSU stocks as a whole, mainly talk about the PSU stocks. So if you talk about the banking space, relatively the entire PSU pack has underperformed. And going forward also, if we see overall the setup wise, on the chart wise, technically also it's got stuck in a range. But if we see selective pockets, such as within the PSU bank, if we talk about particularly Indian Bank, so where all the other banks are underperforming, whereas Indian Bank is at life high territory. And I think definitely as the financial pack will pick up, Indian Bank is likely to outperform a classical pole and flag breakout on the monthly chart. And I think this count is likely to outperform going forward. So I think within PSU Bank, very selective buying interest has been seen. However, Indian Bank is relatively very strong and we can definitely see good uptick towards 660, 680 levels going forward with key support around 590 levels.
Venkatesh, which end of the PSU space is looking interesting?
See, amongst the PSUs, the company which we like a lot is basically SBI, followed by Bob. But we have a preference for SBI over Bob. So at least when it comes to banks, I think the large caps are also relatively cheaper. So hence we would stick to large caps at this point in time, wherever large caps look reasonably valued.
Why do you think Venkatesh SBI is raising that kind of an capital? I mean, I'm just wondering, they don't need capital. And if they raise 25,000 crore of QIP, I mean, either they are hungry for growth or a large NPA is coming. I mean, why would a bank which a quarter ago said that we don't need capital for 2 years is planning to raise 25,000 crore?
We certainly don't believe that a large NPA is coming because I think the NPA cycle is largely behind us. This is possibly to recharge their balance sheet for the next 3 to 4 years of solid growth. Maybe they are targeting a much higher growth levels than what they have done over the last few years. So clearly this will be more growth focused than anything else.
Thank you so much for joining us on the show and sharing your outlook on sectors as well as the overall market. On that note, we'll let you go. But time to get in some BTST ideas from our techies. And Kunal, you go first. What's looking good?
So FSN Nykaa is something which I would suggest as a buy. The stock classically showing signs of a breakout of a swing resistance about 206 mark. Would look out for 218 as a target. Stop loss at 204. Torrent Pharma is the other stock which is opened with a gap up, and interestingly the gap up has been above a major cluster of resistance for Torrent Pharma. So would look out for 3500 as a target. Stop loss at 3200.
Okay, so those are some stocks that Kunal is bullish on at the moment. And Kunal, interesting you say Nykaa. We were just talking about this stock yesterday, this time, given that they had come out with their management day takeaways and we were taking a look at the presentation. Good chart, growth chart is the company. That is something they've chalked out for themselves. So that stock looks good and it's doing pretty well today as well. It was doing well yesterday, continues to do well in today's trade. But on that note, Arpit, what is looking good to you and where are you placing your BTST bets?
So we would be having two ideas, one from the energy space itself. So Reliance Industries, so as index is outperforming and definitely heavyweights are in action. So Reliance Industry, a classical range breakout on the weekly scale after almost 6 to 7 weeks. So risk reward is quite favorable with stop loss of 1490 for an upside move towards 1580. Second would be from the healthcare space. So if we see the healthcare sector as a whole has been outperforming, and within that Max Health has been a huge outperformer. A classical range breakout on the monthly and the weekly setup, retest of breakout on the daily scale. So looks quite strong on the daily and the weekly time frame chart. So it can go long at current levels with stop loss at 1245 for an upside move towards 1340, 1350 levels.
Take a break, gentlemen. Stay with us. When we come back.